Yeah, hi everyone. Hi, hi. Just gonna check if everything is working fine. Testing, testing. Hello, testing.
Testing.
Okay, everything's working. Cool. Hi. I started a little earlier in case of like technical problems. I see people joining. Hello, hello. Hi. Morning. Can we have AUD USD? Yes, we can. Good. All good. Okay, cool. I'm gonna like wait like one more minute and then we can start. Okay, cool. Hi everyone. Welcome to today's webinar brought to you by IC Markets. We're basically gonna do a live analysis session today. Today's the 15th of September. It is 5:30. Well, it's 5:29, coming 5:30. Here in Singapore, I don't know where you guys are from. If you guys are not shy, let me know in the chat box where you guys are from and what time it is for you. But yeah, it is 5:30 here. It's almost evening time. Hopefully some of you hopefully it's not too early for some of you and you're not too tired to learn. Okay. Yeah, so I'm gonna have to do the disclaimer moving on. You guys already know how this works. The disclaimer is super important. I'm gonna stay here for like a minute or two while I explain the disclaimer. Please read through it and just listen. 10:30 a.m. UK. Nice. Nice that we have people from everywhere, but it's 10:30 is yeah, not too bad. Quite it's a good time to learn. I remember having someone saying I think it was the last few webinars, someone said they were from Mexico and it was like 4 a.m. in the morning. That's a little very early. Yeah, so I'm glad your timing isn't too bad. Okay, so back to the disclaimer. Just a risk warning, trading Forex and CFDs carry significant risks and you should only, hi AJ, you should only do it with money you can afford to lose. Please do not borrow money to trade. Please do not trade more than you have, okay? Don't go and like go on a loan thinking that you're going to get rich quick soon. Other than that, I just want to remind you guys that this webinar is purely educational. The whole point of IC Markets doing these webinars and bringing like commissioning us to do these webinars for you guys. Hi Penny. Hi, I'm Cass actually. Hi Buddha. Okay, the whole point of IC Markets commissioning us to do these webinars for you guys is so that it kind of gives you guys a different perspective from a different trader's point of view. So whatever I share with you guys today, please do not take it as a signal to buy or sell. Okay? Please do not take it as a signal to buy or sell. I am just merely, I know today's session is live analysis session, but I'm just merely showing you how I do my analysis on a daily basis. Okay? No worries. No worries, Sibeko. Hi, hi. Okay, it's just for you guys to see from a different point of view how another trader would trade. A different trader would trade differently from me. There are many styles of trading. I am just showing you my style of trading. Other than that, please read through the disclaimer. It's basically just a reminder to tell you guys that this is an educational webinar. It is not any kind of signals group. I'm not telling you to buy or sell. If I do say anything along the line of buying or selling, it is basically me. Okay, I'm just sharing what I am going to do. Okay, please don't do it if you have not done your own analysis, if it doesn't make sense or whatever. Okay, don't go in blindly. Also, this is not some kind of financial advice or any kind of investment advice. It is purely, again, educational. Couldn't come last week because we were fighting our government. Are you from Indonesia or what's that other country? Nepal? I know two countries who are fighting their government right now. Are you from? Okay, how's that going? Actually, I read the news. I see it happening. I think they burned down the parliament, similar to Indonesia. As Indonesia also burned down parliament. How is that going? Do you guys have a curfew? Do you guys have to stay in? And I also watch a video somewhere that there's a new prime minister, and it was decided via Discord. I think that's amazing, by the way. But hi, party grandpa. Hi, everyone. Okay, so I'm going to introduce your host. Let me know, Buddha Lama. I do want to know what's happening in your country, actually, since you're on this webinar. Do share with us. I'm asking so that I can let you guys know that if you, because the whole point of trading is so that you make money, right? I'm sure everyone who joined trading joined because they wanted to make money. It's not because you think it was like, I don't know why you guys joined trading, but I definitely joined trading because I wanted to have a place where I can make money. I just want to let you know that if you get really good in trading, you can make a lot of money. And whatever political things that are happening in your country will not affect you because the market is the one that is paying you and not your country's economy. Okay, so I'm so sorry that like some of you are from countries where there's a lot of corruption and like you need to fight your government, but just know that trading can help you, not rely so much on your country's government, your country's economy. Everything is fine now. Yes, new PM was indeed elected by Discord. That is amazing. I thought that was so amazing that you found your prime minister from Discord. Well, not really from Discord, but Discord was they used Discord to decide. Okay, anyways, for those who don't already know me, my name is Cassandra. You guys can call me Cass. I am an investment analyst at Everest Fortune Group, and I am also a prop trader. So let's talk about Everest Fortune Group first. Everest Fortune Group is a research firm that specializes in forex and equity research. Hey Jamilu, how's it going? Okay, specializes in forex and equity research, which we have been the finalists for multiple years running for the best forex and best equity research. We basically, what our team does is we basically look at the charts a lot. We study the charts. We do a lot of back testing, we do a lot of forecasting, we do a lot of analysis, and we kind of am very familiar of where the markets are going. If you study the charts enough, you will start to recognize patterns. So I start to recognize patterns. My team start to recognize patterns on the charts, and that's why the brokers like IC Markets will invite us, Everest Fortune Group, to do these webinars for you guys so that we can share what we see on the markets, okay? That being said, again, trading is a very personal journey. So my way of trading may be different from another profitable trader, okay? There's no one way of trading. Just do whatever works for you and do whatever makes you money, okay? It doesn't matter. Even if you want to pray to the moon and you want to ask the moon, like today you go out to the moon and you're like, okay, moon, should I go in for a buy or sell for gold? And the moon is like shining so brightly. If it shines so bright, it means that it's a yes. You sell or buy whatever signals you're getting from the moon. Do it if it makes money. If it's working consistently, who is to say that it is wrong? Okay? So I am basically just sharing my style of trading that has made me profits. It is not the style of trading of every profitable trader out there. Okay, other than that, I am a prop trader. For those who don't know what prop trading is, it means that I trade funds from different companies, prop trading firms. Okay, to become a funded prop trader, I had to pass a couple of tests. The test required me to do 10% profit within a month. It's not very hard. It's not very easy, but it's something that not many traders can do, okay? How I do 10% a month, I usually do 2.5% a week. I aim for 2.5% or 3% a week, and then I end the month with 10%, passing the test. Last week, I don't know which week was it, but I ended, so far this month, I am in total of 5% profits. Okay, so I did 3% the first week of trading, and last week I ended with 2+%. So I'm about in 5% profit for the month. Okay, and I don't know if you guys think that is bad or good, but to me it's good because I am trading on a $300,000 account. $300,000 to me, 5% of $300,000 account is 15,000 US dollars. So I'm pretty happy with that for now. I hope I continue to get profits within a month. Let's go and look at the charts together and hopefully find something together. I mean, I find something and then you guys don't take it as a signals group, okay? Just you guys get in if you agree, if you've already done your analysis, okay? Other than that, I do specialize in technical analysis, so you guys can ask me questions on technical analysis. Fundamental analysis, I don't really trade so much with the news, but you can still ask me. I'll try my best to answer you. Okay, so agenda for today is key approaches, cheat sheet checklist, and then the live charts. This is the cheat sheet checklist that I use. I usually use depending on how I'm trading. If I'm trading, for those who are regulars here, you know that I am an Elliott wave trader. If I am trading with Elliott wave, then I don't really use this cheat sheet. If I'm using price action to trade, then I'm using this cheat sheet. Okay, so this cheat sheet, as a trader, I always ask myself a few questions. The first question I'm always going to ask myself is price going up or down? This is very important. If you can answer this question, that means you have won 50% of the battle. If price is going up, then you enter for a buy. If price is going down, then you enter for a sell. So the first two, let me pull out my pen or laser pointer. Okay, so is price going up or down? You're going to use a trend line or a channel to decide that. So a trend line will require 3 touches either on the support side or resistance sides, and a channel will require 4 touches, 2 touches at the top and 2 touches at the bottom. Okay, after I am done answering my first question, which is where is price moving up or down, because I am a trend trader. I am a trend trader, meaning that if price is moving up, I enter for buy. If price is moving down, I enter for a sell. Okay, then my next question is, okay, now that I know price is going up and I want to enter for buy, where do I get in for the buy? Okay, so where I get in for the buy is where I use horizontal levels. I use pullbacks, overlaps, swing highs, swing lows, and Fibonacci levels to decide where my entry is going to be. This will also act as my stop loss and my take profit. Okay, so horizontal levels are super important on top of finding out what trend is. Take note, I don't usually get in on sideways market because I am a trend trader. Not to say that you cannot make money on the sideways market. You can. If you're using certain methods like the Wyckoff method, you can play the sideways market, but that's not my style of trading. My job today is to share my style of trading and the way that I usually make profits from the market. I'm not sharing what other people are doing, basically my own experience. Okay, other than that, I do take note of wedges, triangle, double top, double bottom, basically chart patterns to see if there are other things that the markets are telling me. Because if you see a double top, double bottom, that's going to signal to you an uptrend or a downtrend or a trend reversal. Okay, other than that, things that you can use are SMA, golden cross, death crosses. You can use a 200 by 50 SMA and any natural moving average. I don't really use this anymore because it requires you to change the settings quite a bit. You can if you want to. I then use stochastic and RSI, stochastics and RSI to see if price is at a support and resistance level, or to see if there's divergence. Divergence is very important to me because imagine I see price going on an uptrend and I'm just like, okay, I'm going to get in for a buy. But then you pull out stochastics and RSI and you see a divergence. Divergence is basically the market's way of telling you, hey, the trend might have ended and we might start a new trend. Okay, there might be a trend reversal. Okay, so the other thing is correlation. Correlation is using different charts to come up with the same idea. Okay, so for example, I think the Canadian dollars is going up. I'm not sure, so I now pull out oil to make sure that oil is also going up. Why do I pull out oil for Canadian dollars? It's because Canada is a very big producer of oil. Therefore, if the Canadian dollars go up, usually oil prices is also going up. Okay, if oil prices go down, usually the Canadian dollar is also going down. So these is examples of correlations. Other examples is inverse correlation. So gold is considered a safe haven metal. So if gold is going up, usually the price of cryptocurrency will go down because cryptocurrency is considered risky asset. So they're inversely related. And other examples is using currency to currency, where you use like Australian dollars in comparison to New Zealand dollars. Okay, because why? Because Australian and New Zealand dollars are usually moving in the same direction. Okay, after I'm done with this analysis, I will then decide if I'm going in for a reversal or a breakout. You guys already know my style of trading. For those who are here every week, I am a reversal trader. I am someone who waits for pullbacks and then I get in and I continue with the trend. When I say reversal trader, I don't mean as in trend reversal. I mean as in I am a trend trader, but I'm waiting for pullbacks to get in to continue the trend. I am definitely not a breakout trader. I have done back testing on breakout and I just cannot make it work. And that's okay. You need to know your limitations as a trader. If you try something and it doesn't work, then you need to stop and you need to try something else. Hi, Andres. Hi. Okay, so I think we're good with the understanding of this cheat sheet. Let's go to the charts. So thank you so much from IC Markets. Thank you for staying. Let me pull out the charts. Oh, sorry, I need to go onto my template. I do not want to use someone's. Give me a moment. There you go. Okay. Oh my gosh, why does this happen every time? That toolbox is gone again. Give me a moment, guys. How do I pull it out? If anyone knows how I can pull the toolbox out, let me know in the chat box. I've done it many times. I just cannot remember right now. You know, there's that toolbox here where you can choose the Fibonacci tools. Where is it? Sometimes it's there and sometimes it just disappears. I'm so confused. Why does this happen? If anyone knows how I can pull it out, let me know in the chat box so that we can speed this up. Drawing panel, is that the one? Yes, it is the one. So you go here to your profile, click on it, and then choose drawing panel. Who keeps removing the drawing panel? We need the drawing panel to do analysis. I say who because this is a shared account. This is IC Markets account. Okay, so this was what was done last week and it did not work out. That's okay. That is okay. That was just an example anyways. This was not, I did not use this. Okay, AUD USD still going on an uptrend. If you guys have any requests, put it into the chat box now. If not, I'm just gonna pull out the usual stuff. Okay, AUD USD, we're gonna do that requested by Ren. I'm also gonna do my favorite, which is EUR-USD. EUR-USD is one that has made me quite a bit of money, so I'm quite happy. Oh, why do I not see IC Markets here? Oh, there you go. This was done not last week. I don't know when was this analysis done, but did not work out. Let me see. Cryptocurrency. I'm seeing inverse head and shoulder pattern in GBP USD for our time frame. Can you please look at that? Just miss it. Oh, I don't know when this analysis was done, but worked out amazing. This entry was on point, buy entry here on the dot, and then it just shot up to take profit. I did not get into this trade. This was an analysis that we did together. Anytime I pull out IC Markets account, it is something that I did with you guys on a Monday. Other than that, I usually do my analysis on my own trading view. So I did not get in on this, but it was something that we did on this webinar. I just don't know when. Okay, so EUR-USD, GBP-USD, AUD-USD. Let's try to do something not Forex related. Let's do ETH-USD or maybe XAU-USD. Oh, I really, really wanted Ethereum to do a pullback even more. Okay, or XAU USD. Sorry, I'm just pulling out to see which one is a better option. Nice. Ether gold is going sideways again. Gold is now going sideways again. Gold is crazy. You should just keep buying gold because every time you buy, okay, there's no analysis for gold because it's just going sideways right now. So let's just do ETHUSD. Where is the IC markets? There you go. Okay, let's stick with this 1, 2, 3, 4 charts, and then if we still have time, we can do more. Okay, you guys know this 3 is Forex, so I'm gonna do my normal analysis on Forex, which is basically using the cheat sheet that I went through just now. Where's the cheat sheet? Okay, I'm gonna use this to do the analysis for Forex. Okay, because I only use Elliott wave for Ethereum and gold, but for Forex, not so much. Okay, so the first thing I want to do is look for trend. Right? Do you guys see an uptrend, downtrend, sideways market? Let me know in the chat box so that I know we are still on the same page. Anyone at all? Okay, no one's helping me. Okay. Thank you, Jordan. Thank you, Andres, for replying. Yes, so we are on an uptrend. Not sure what happened here. Thank you, Sibeko. Not sure what happened here, but yeah, something happened here. It's okay, it's not that relevant to us. It was quite a while ago. This was on the 9th of April. So let's just not focus too much on that. Let's just focus on the current uptrend. I'm trying my best to draw it as much as possible to fit our analysis. Okay, because of this, it doesn't work, but it's okay. It is still an uptrend. So what constitutes an uptrend? An uptrend means that there is higher highs and, sorry, higher lows and higher highs. So even though if we pull out a trend line, we cannot really draw a very nice trend line, and we pull out a parallel channel and we cannot really draw a parallel channel. It is still an uptrend because it is still doing the higher highs, higher low thing. Okay, so even if you cannot draw it on the charts, it is still satisfying our requirement of higher highs, higher lows. So we know that price is going on an uptrend. That means I do want to get in for a buy. Okay, I want to get in for a buy because I am a trend trader, therefore I want to follow trend. So what am I going to do now? I'm going to look for support and resistance level because those are going to work as my entry, stop loss, and take profit. Okay, how do I find that? It's very easy. You go on that and then you find the closest swing highs and swing lows to where price is. This is where price is right now. I need to find the closest swing highs and swing lows. So there's swing lows here, there's swing highs here, swing lows, swing lows, swing lows. Okay, so basically this is not relevant. This was quite a while ago. This was in July, but we're gonna just leave that there. We might need to use that later, okay, because that might end up being our entry. So I'm just gonna highlight the swing lows first. I'm gonna highlight the swing lows that is closest to price, and then the swing highs that is closest to price. Yeah, I don't like this. Yeah. Why did I still take this even though it was 24th of July? Because this is an overlap. So overlap meaning that this was once a resistance. Now it has broken, right? It has broken and now it has turned to a support. So this level here is called an overlap where a resistance has turned into a support. So it is significant and we should take note. Okay, so one of this is going to be our entry for the buy. Okay, one of this is going to be the entry for the buy. So once that I've pulled out horizontal levels that make sense to me, now I'm going to pull out Fibonacci levels. So how do I use Fibonacci? I'm gonna 1, 2, 3, third one, Fib retracement from the swing low to the swing high. Now I'm gonna pull out levels. Let's make it white so that we can see it. How do I turn this white? How do I turn you white? Nope, nope. This is why I don't like to use IC Markets account, because the settings is, I have to redo the settings every single time. Okay, for those who know Fibonacci, let me know in the chat box the 5 levels that we usually focus on. Need to let me know the 5 levels. Anyone? This is for the benefits of the new people, by the way. For the beginners. Okay, I'll give you guys an answer. Anyways, for Fibonacci retracement, there are 5 levels that we look at. The first is 23.6, 38.2, 50%, 61.8, and then 78.6%. So anything that is not those 5, you can get rid of them. Okay? You can get rid of those that is not relevant to our analysis. These 5 levels are going to be the 5 levels that you enter as your entry, your stop loss as your take profit. Okay, so right now I've got 5 levels. Why is it important to have these 5 levels? Because I want to see which of these 5 levels lines up the closest to the swing highs and the swing lows that we have highlighted. Okay, technically there is a swing low here that extends all the way to here. Okay, so which one do you think is the strongest? That's the one that I'm going to use for my entry. Okay, so right now I've got this first one here, which connects to this swing high. I've got this second one here, which connects to this overlap. I've got this 50%. It's not connecting to anything, so I'm going to get rid of it. This 50% is the weakest of the 5, so I'm going to get rid of it. Why am I getting rid of it? Because it is unlikely that price will go there and reverse. Okay, I've got this. This is basically what I do every single time. I just draw and then I start eliminating. It's just elimination for me. I'm gonna explain in a bit what I'm doing. Okay, out of these 4, which one do I think price is most likely going to go to? I don't think it's going to be this one. I don't think it's going to be 78.6. Why? Because price came here one time and then it reversed, right? It came here, it broke through, and then it came here and then reversed that second time. It broke through again and then came here and retested it. So every time it breaks through, it's telling me as a trader that this is not a strong level. If it was a strong level, price will not be breaking through it that easily, right? Price will not be breaking through that level so easily. Price is not respecting this level. Therefore, there is no reason for me to think that price is going to come here and suddenly respect that. So I'm going to get rid of 78.6. I'm just eliminating as I go. So I think price is going to come to one of this, and then there I'm going to enter for a buy. Again, why am I entering for a buy? Because price is moving on an uptrend. There's no reason for me to go against price. Right? There's no reason for me to go against what price is doing. Price is moving on an uptrend. Therefore, I think it's going to continue moving on an uptrend. I just need to know where am I getting in for the buy. Okay, I'm trying to see. Technically, if I do this, this is a trend line because a trend line requires 3 touches. 1, 2, 3, 4 touches. This is a valid trend line. It's not the best looking trend line, but it is a trend line. You know what? If I pull out that 78.6, where does that 78.6 leave us? Okay. Yeah. Let's just not aim for that 78.6 because price did not respect that 78.6 a few times. So we're just making a decision based on whatever we see. Okay, so I'm trying to see if price is respecting this 61.8 zone. Okay, I would say yes, price came here one time, came here two times, three times, and then reverse, and then kind of reversed here again, four times, and then reversed, five times, and then reversed, six times, and then reversed, seven times, and then reversed. Price came here seven times and reversed. So this is in fact a strong zone that I want to look out for. Let me look at more things. Okay, price came here one time, two times, three times, and then reversed. If it comes here the fourth time, basically these three levels are looking pretty strong at this current point of time. This 23.6, not so much. I don't think price is gonna... If price is going to pull back, right, I don't think it's gonna be this 23.6. Okay, usually it doesn't just respect one overlap, it usually comes and retests a bit more. So I think it's going to be either the 38.2% or the 61.8%. Okay, I think price is going to reverse to one of this, and then here you're going to see a reversal happening. So that's where you're going to enter for a buy in one of those. I mean, I am going to enter for a buy in one of those. Clearly, it's not going to be today because price is still up here right now. Okay, but if price pulls back, I hope it pulls back to one of this level. Okay, now I'm going to pull out more Fibonacci levels to see if, 1, 2, 3, if I can come up with more analysis. If I can strengthen, I'm going to take this swing low here and pull out levels. 50% is going to line up there, obviously. 78.6%, nope. No, technically it can. Give me a moment, guys. I'm basically trying to make sense of this. Okay, now I'm gonna try a fib projection. Okay. I think, based on my analysis, okay, price is going to reverse from either this number here or here. Okay, it's going to be one of it. Okay, where exactly, I'm not sure, but I think the reversal is going to happen, right? Because price cannot just keep going in one straight line up. Price is constantly moving in a zigzag. Okay, so when it zigzags, it needs to pull back. Where is it going to pull back to? It's going to either, from what I'm seeing, it's either going to pull back to here or here. Okay, and then here you can, I'll consider getting in for a buy, or here I'm going to consider getting in for a buy. Okay, let me see what else I can incorporate. Price is going to pull back to 61.8%. Hopefully, I mean, I cannot say for sure, but okay, let me see what else am I seeing. I'm gonna pull out Ichimoku just in case. I know it's not gonna say much. Not saying much. It's definitely not saying much. Stochastics, changing the settings to 21, 5, and 3. Just trying to see if there is a, yeah, stochastics not showing me anything. Not showing me anything. RSI. Okay, no divergence, which is a good sign. There's no divergence, that's good. Okay, I'm gonna come up with my conclusion. Okay, I think price is going to pull back here, and then somewhere here or here. Okay, and then it's going to go up to where? if this is in fact the latest swing high, which I don't think it is, okay? If this is in fact the swing high is ended, then back to the swing high. But I have a feeling it's going to go up a bit more before doing that pullback, okay? Because when I pull out RSI and stochastics just now, price has not reached. Okay, what am I using RSI and stochastics for? I'm using it as a support and resistance. Okay, so it's either price has already done the swing high and now it's going to come back down to the swing low. It's going to try to make a swing low, or it's going to come and retest again one more time, make another swing high, go up a bit higher before coming back down. Okay, you just need to remember price is constantly moving in a zigzag pattern, so it has to come down eventually, and that's when it does come down, you will prepare to get in for a buy. Okay, so I think it's gonna be one of this. I cannot say right now which one it is because I need for price to come here and then I need to redo the analysis. But if price comes here by this week or whenever, by the way, guys, I always do these webinars with you guys. You know, doing these webinars for you guys is so good for me because I come and do this analysis for you with you guys on Mondays, right? And then usually I get into the trade on like Tuesday, Wednesday, or Thursday because price is not at the entry yet. I need to wait for price to pull back to the entry, and then I get in, and then by Friday I would have made my money already, and then I'm done for the week. And then the week repeats again where on Mondays I come and do the analysis for you guys, and then I get in on either Tuesday, Wednesday, or Thursday, and then I'm done. Okay, so this is my idea for AUD USD. So conclusion is I think AUD USD is bullish. Okay, get in for a buy at the pullback. The two pullbacks I'm planning is either this or this. I just don't know which one it is yet. That's as much as I can narrow down at this current point in time. I'm a bit more biased of it being this one. Okay, why? Because there are more Fibonacci levels lining up there. Also, if you guys pay attention, like look closely at structure, you guys can see that there was a break of structure here. So I don't know if you guys have ever attended my webinar on smart money. Okay, there was this break of structure here. You see that there was this swing high here, and then price could not break it, and then it went down, and then price came here again a second time, could not break it, and then came down, and then came back again the third time, could not break it, and came down, and then finally on the fourth time. So it's been trying since 13th of August. Since the 13th of August, price has been trying to go higher, but it just couldn't. There was this resistance here. Okay, there was this resistance happening here, so it rejected and then came down, and then it came back the second time and then came down. Tried again. It tried on the 1st of September, couldn't break it, came down, tried on the 3rd of September, couldn't break it. Finally on the 5th of September, it finally broke structure. So break of structure is a thing. I don't know if you guys have ever learned this before, but it's a thing that you can use. So the thing about break of structure is price usually will come back to that area where I cannot remember the term right now. Okay, but it will usually come back to the area where the break of structure happened. So if we look closely, let me zoom in. Okay, if we look closely, the break of structure happened here. This was the last swing low before the break of structure. This was the last swing low before the break of structure. So usually price will come back to the last swing low where before the break of structure happened. So price finally broke out here on the 5th of September, and when it broke out, the last swing low was here. So I'm a bit more biased that price is going to pull back all the way here, and then here can consider for a buy. Okay, so I'm a bit more biased, but there is still a chance that it will just pull back here and then continue, but I'm a bit more biased that it's going to happen here. Okay, so if I have to give my most biased analysis, this is what it's going to be. Sorry, let me just delete everything. It's going to be here, where the break of structure happened. Here. Okay, I think price is gonna pull back there. My stop loss is gonna be somewhere here. Once the pullback happens, entry, my take profit will be back at the swing high. Obviously, you don't aim at the highest high, you aim below. Okay, maybe somewhere here. Then this will give you a very good risk to reward trade. Okay, but obviously it's not going to be right now. You need to wait a few days for this to happen. If you guys are here to join my webinar and to learn my style, unfortunately my style of trading is a lot of waiting. It's a 1 to 3.5 trades. I thought it would be more, but yeah, 1 to 3.5. It's not very bad, honestly. It's okay, it's not bad. If you're aiming for the highest high, it will be like 1 to 4, I think. Yeah. But we don't aim for the highest high, okay? We aim a bit lower in case price couldn't reach the highest high. So I think this is, I'm pretty happy with this analysis. I just need to wait for price to pull back first before I can enter. But that being said, there's a chance it's not going to pull back now. It's going to keep moving a bit higher before the pullback. Why? Because when we pull out RSI just now in stochastics, price has not reached a resistance area yet, or it has already reached and it's time for a pullback. I don't know what's going to happen. We just have to wait for price to tell us what's going to happen. Okay, so let's move on to the next one, which is EUR USD. Don't like this. It's going sideways. Yes, I know it's going up, but if we're zooming in here, it's going sideways, kind of. Okay, so let's just pull out the trend line. No trend line. Trend line, you need 3 touches, no trend line. Let's pull out the parallel channel. Looks like the parallel channel will fit. Yep. So depending on how I draw it, it will fit very nicely. Yeah, I can just draw it here. No worries. Thanks for joining the webinar. Okay, give me a moment, guys. Okay, this is as nice as I can draw it. Okay, that's why I always say like channels and like trend lines should always just be a guideline, because a different trader can draw it differently and it'll look like something else. Like someone can draw this and somehow make it look like a downtrend. Okay, but I'm drawing it to make it look like an uptrend because this is what I see. So you need 2 touches at the top and 2 touches at the bottom. Okay, that top isn't really touching, but I know if I adjust it, it will touch, right? If I just adjust it, if I just move it, yeah, see? So both sides are touching. This is a valid channel. If we're following like textbook kind of like definition of channel, this is a textbook definition. Okay, so now my bias is that I'm gonna get in for a buy, right? So I'm gonna go pull out my support resistance level so that I can get in for the buy. No. Sorry, adjusting everything so that it looks clear to you guys. I know I want to get in for a buy. Where am I gonna get in for a buy? Okay, even here I can see like a mini trend line happening. Okay, where am I getting in for a buy? Time to identify swing highs and swing lows. Swing low, swing low, swing high. Overlap. This looks like a fake out. Right? Okay, if I erase this part, if I just erase that part, and I'm just identifying swing highs and swing lows, it looks like price is going sideways. We're in a sideways market, right? It looks like price is just going sideways, and then suddenly you've got a, how do I move forward? Oh, sorry, there you go. Then now you got a fake out that then comes back in and then continues to respect. Give me a moment. I think this is going to be a sell actually. I don't remember, so we are going to Google. Okay, so the fake out happens this is giving me, it's giving me a vibe that it's going to go sideways. It's going to go down. Okay, this looks a little dangerous if I'm not even... I don't like that fake out. I really don't like that fake out. That fake out shows awfully looks like this. Awfully looks like this. Wait, where is it? See, so with this Wyckoff logic, the fake out happens and then price will go the other direction of the fake out. Okay, I just taught this a while ago. Give me a moment, I need to think this through. Okay, I know just now I said that it was on an uptrend, but that fake out makes me makes me think twice. Okay, what I think right now is that price going sideways. It's going sideways in this rectangle. Sometimes the fake out happens twice even, just to trick the trader. Sometimes it even happens twice. Okay, to be safe, right? To be safe, I think it's going to end up being a sell rather than a buy, because this pattern is looking very familiar to me. It's showing me it's showing me a Wyckoff pattern, okay? But I'm just not sure if it is. Downtrend followed by distribution. Okay. I'm not sure what this is looking like. To be very sure, you need to wait for a breakout, a retest, and then you get in for a buy. Okay? To be very sure. I'm not gonna get into EURUSD. I don't like the pattern of the charts. The pattern of the charts is giving me Wyckoff. Okay? Wyckoff likes to do this fake out thing and then it goes the other direction. It does a fake out and then later you're like, oh, okay, maybe it's an uptrend. Yeah, then you go in, it fakes out again one more time, and then it goes the other direction. Okay, it's done on purpose. It is done on purpose. This is done by smart money. They do it so that you guys lose money, because remember I told you guys so many times that trading is a zero-sum game. For someone to win in trading, someone has to lose. So they do this fake out just to so that everyone's stop loss, like your stop loss is here, right? Because you think, okay, I'm going to put my stop loss right above this zone. I'm going to put my stop, then your stop loss gets triggered and then everyone loses money and then now there's money to be made. Okay, so the only safe way that I see for this is to play a breakout. A breakout meaning that it needs to break out here, come back and successfully do a retest. Okay, a retest, and then it will continue with an uptrend if it is an uptrend. Okay, otherwise what's gonna happen if there's no retest, if there is no successful retest, I think it's gonna be another fake out and then it's gonna come back and move here. Okay, so at this current point of time, I'm actually more biased of it being a sell than a buy. Okay, I'm more biased of it being a sell than a buy. So if I had to come up with analysis for this, I think this is more likely to happen than the buy. Yeah, I'm a bit more biased of this happening. Because of the pattern of structure of the charts, it makes me think this is a scam. It makes me very reserved. Sorry, I'm trying to find my short tool. There you go. This looks like a very good risk to reward trade. Maybe 1 to, oh, 1 to 6. But this is a low probability setup, okay? Low probability setup. I might just get into this trade, but on a very, very small risk. Maybe like a 0.3% risk. So like if I have $100,000, usually I risk $1,000, which is 1%. Maybe I'm just gonna risk 300 just for the sake of having exposure on this trade. Okay, just for the sake of having exposure on this trade, because I feel like it still might work out. Okay, I feel like it still might work out, and yeah, I feel like it still might work out, especially since 13th of August, price has been going sideways, right? Price has been going sideways. I cannot foresee price suddenly having volume unless there's news that is coming out tonight or something. I can't see price suddenly having volume and suddenly just spiking up. Okay, because it's been going like passively going sideways for a month now. I can't see it suddenly having volume and just spiking up. So I think even if it goes up, it might just continue to passively move up. Okay, and to make this a bit less risky, I'm gonna move the stop loss. Although I think it can get there, I'm gonna move the take profit to here. So then I'll bring it to a 1 to 3 trade. Yeah, this is a way, way safer take profit. I feel like this is aiming for a lot, especially for something that is low probability and something that's going against trend. I think this might happen. Might happen. Yeah. Yeah, I think this really might happen. Okay, sorry, I'm moving the stop loss, the entry away, just to this swing high here, because price gave me 1 time, 2 times, 3 times actually, and maybe the fourth time it might just reverse. Again, this is a low probability setup because we're going against trend. So low probability setup, but I think the entry is somewhere around here. I know that's a very huge entry, but because I'm taking this last candlestick, okay, this one I'm drawing here. You guys can see how long that candlestick is. Basically, I'm taking this entire candlestick as my possible entry. But yeah, again, this is a low probability setup. Low probability setup. Okay, low probability setup. Yeah, so the entry is very, I cannot even give a very exact entry because of like how price is moving because of the structure, but basically it's this green box. Gonna color it blue. I think somewhere within this green blue box, price is gonna reverse. Okay, again, low probability setup might or might not work. Okay, I'm seeing an inverse head and shoulder pattern in GBP USD on the 4 hours time frame. I'm trying to see the inverse head and shoulder. Is this what you're seeing? That's the shoulder. Oh, wait. Is this what you're seeing? That's the shoulder, the head, and then the shoulder. Okay. Usually, after a head and shoulder pattern, right, it usually does this, like that break, and then breaking the neckline for it to be valid. But because if you look at here, I do see this inverse head and shoulder. Okay, I see it. Okay, so usually it does this inverse head and shoulder thing, and then there's usually a very strong push up. Okay, there's usually a push up that breaks the neckline, which is this dotted area. So the neckline for GBP USD would be here. Here, right? This would be the neckline. Oh wait, unless, yeah. So this will be a neckline. So you need price to break this neckline, which is this green area, for it to be a valid head and shoulder, and then for it to be kind of like a confirmation for price to go up higher. So right now it hasn't really, I mean, if you count this, it's kind of breaking right now. It's kind of breaking right now as we speak. Okay, if price successfully breaks this neckline, I think that is a good indication of a trend reversal, okay, of price going higher. Okay, but at this current point of time, until that happens, I dare not say that it is valid. But yes, nice catch on this shoulder, and oddly shaped shoulder, if we're taking this whole part. Okay, shoulder. Yeah, the shoulder doesn't have to be the same size, so it's valid. Yeah, so we need to wait for the break of this neckline, which looks like it's happening right now. And then after the break of the neckline, what I would usually do is wait for a retest. So you see inverse head and shoulder followed by a break, then followed by a retest. So I usually would want to get in for a retest, break first, a retest, and then here enter for a buy. Okay, so the retest happens at the break of the neckline. Okay, so this looks like it's going to happen maybe tomorrow or sometime this week, but definitely not today. Okay, if it does that, but yeah, nice catch. Okay, but other than that, let me do an analysis for GBP USD. I mean, it's definitely doing an uptrend already, so no surprise. Okay, it is a valid trend line. Honestly, depending on how you draw the trend line, it looks like it's a break, right? If you draw your trend line like that, it looks like that's a trend line breakout, retest, and then continuation. Okay, but depending on how you draw a trend line, now it's an uptrend. If I do it like this, it looks like it's a trend reversal. If I do it like this, now it looks like an uptrend. Okay, I am going to stick with it being an uptrend. Why? Because of the higher highs and higher lows. Okay, the rule for trend is always still following higher highs and higher lows. higher highs and higher lows is what is a good indication. These trend lines and like channels, these are just references. Because if I draw it this way, it's an uptrend. If I draw it this way, it's a trend reversal. So which one do I draw it? So just use the higher highs, higher lows rules as a guide, as a good guide to see where trend is going. Okay, because trend is definitely showing that it is an uptrend. Actually very clean head and shoulder, man. Yeah, so we just now need to break for this, wait for the retest, and then get in. Again, I see this as a very good trade. I'm not getting in because I've already told you guys in the start of the webinar that I am not a breakout trader. I am not a breakout trader. It might just actually work. This analysis might actually just work. Price is might just break out here, come back and do the retest, and then continue with the uptrend. It's just that I don't like playing the breakout, so I'm not gonna get into breakout, but you guys decide what you want to do with that information that I'm giving you. Okay, you guys decide what information. So good conclusion. Sorry, just ignore the typos, we don't have time for this. Okay, bias for uptrend, inverse head and shoulder, giving confidence of uptrend. What now? So wait for break of neckline, retest, and enter for buy. Okay, so this is a very quick analysis for GBP USD. I have a very strong feeling this is going to work out, but I'm not going to get into this trade. So I'm just going to put an analysis so that next week when we come back, we can see if it worked out or not. I'm not getting into this trade, but if you guys want to, you can, because again, I am not a breakout trader. I'm trying not to break my rules. If I've decided that I'm not a breakout trader, then I do not get into breakout trades. Okay, so that's my rule that I want to follow. So the rule, I think this is going to be the buy. Stop loss, you can just put it below this swing low here. Where is the stop loss? Okay, there you go. Right below this swing low here. You want it to be kind of tight. And the buy, like, let's just aim for the next swing high. That makes sense, okay? Looks like a 1 to 3. Looks like it's gonna take a few days to get there. Definitely looks like a 1 to 3. Oh, 1 to 2.3. Not amazing, honestly. I guess you can kind of play with the stop loss, but okay, the reason why I don't play breakouts is because with breakouts, what I notice, or at least when I do back testing, okay, look, this breakout happens, right? It's gonna come back and retest. Sometimes that retest will wick to my stop loss. It wicks a lot. Like you see this wick? Do you see that wick there? The direction of this is still up. It's still gonna go up, but it wicks and hits my stop loss. So that's why I am not a breakout trader, because I can't get the retest right. For some reason, I just can't get it right. It breaks out, it comes back, and that retest usually hits my stop loss, and then it continues up. So I end up becoming correct. It's just that before I'm correct, I get stopped out first. Okay, so that's why I don't play the breakout. But if that's something you want to, you need to work on placing your stop loss at a very comfortable level, a level that makes sense. Maybe because my style of trading, I like to keep very tight stop loss so that my risk to reward makes sense, but I get stopped out prematurely. Okay, so yeah, this is something you guys can consider if you want to. But yeah, I'm basically done for today's analysis. What I think is going to happen is AUD USD needs to pull back. Okay, it needs to pull back. Whether it's going to pull back right now or later, I'm not sure. Of all the analysis that we've done, I'm not getting in on this because it goes against my rule of not playing breakouts. But I think this might actually work out. EUR USD, I'm definitely not getting in on this because it also goes against my rule. My rule is that I don't go against trend. Okay, so we've already decided that price is going up, and if I get into this sell, I'm basically going against the uptrend. So I am personally not getting into this, but I think there is a chance that this might work out as well. AUD USD is the only one that I will wait and see for price to pull back and get in. Okay, so other than that, that's all I have for you guys today. Take care, guys. I hope you guys make lots of money on trading. So far, the analysis that we've done doesn't look very promising. Doesn't look like I'm going to get in on any trade this week, unless AUD USD does the pullback by this week. But for it to get back here, today is Monday. It took Monday, Thursday, Friday, Monday. Thursday, it took 3 days for price to get from here to here. So maybe by Thursday, it would have pulled back to here, hopefully. Then on Thursday, I might have a trade to get in on. Okay, so that's all I have for you guys today. Take care, guys. Thanks everyone for joining. I will see you guys next week, same time. Tomorrow, I have a Bahasa webinar for IC markets. For those who don't know, I'm actually Malaysian, so I speak like 3 languages. So I'm going to do one webinar tomorrow for IC markets in Bahasa Melayu. Or if you're Indonesian or if you're Malaysian, you'll be able to understand me. But for those who are here for the English sessions, English is always Monday, same time next week. Okay, bye guys. Take care. Good luck with everything, Buddha. I hope you guys are safe. Okay, bye.